All right, we are going to get started, everyone. Hello and welcome. My name is Caitlin Forte, and I am the Manager of Business Partnerships for the CSU Alumni Association. Whether you are watching live today or the recording later, we are so happy to have you here. You are here for our long-term care planning webinar with Capstone Financial Assurance Team, and we hope this webinar provides you with all the information you are looking for. Please put in the chat where you are watching from and what year you graduated. Whether you are tuning in now or later, thank you for joining us. As a reminder, this is a webinar, so you are automatically muted with your camera off. So please use the Q&A or the chat box for questions and comments throughout the session. We will save time at the end of the webinar to answer all of those. In just a moment, I will also add a chat link to the box for downloading our mobile app, which is the best one-stop shop for resources that we provide, including upcoming events like this one, career resources, and membership information. We are recording this webinar, so if it will be available on our YouTube channel after today. We will send out a link to where the recording will live if you would like to share it with your family and friends or access the information later. And now I'm excited to introduce to you all today our guest speaker, Christina Frey. Christina has over 20 years of experience in the long-term care planning space. She's a valuable resource and trusted advisor for the CSU Alumni Association, and happy to connect with any one of you one-on-one to learn more after this webinar. Without further ado, welcome Christina.
Wow, Caitlin, thank you so much for that warm introduction. And of course, a big thank you to the Colorado State University Alumni Association for providing Capstone Financial Assurance this opportunity to educate the alumni on smart planning for long-term care. And I want to thank all the guests who've taken time out of their day to also join us for this educational event. Now, as Caitlin mentioned, we are Capstone Financial Assurance, and we are very proud to be the alumni's preferred business partner for long-term care insurance planning. Our team of agents are very knowledgeable, and together we have over 50 years of combined experience. And in addition, we are independent agents. Therefore, we work with all the top-rated companies that provide long-term care coverage. This allows us to always put your needs first, ahead of our own, and find you the very best solution. Now, there are a lot of agents out there that actually sell long-term care insurance, but there's very few of us who specialize in it. And again, we are your specialists, and we look forward to helping you with your long-term care planning education, questions, and needs. Today's webinar is going to be focused on really educating you about long-term care and help you to understand why long-term care planning is important. So let's go ahead and jump in. When you look forward, how do you envision your retirement? For most people, one of their main goals is to plan for a retirement that allows them to live their life to the fullest. This plan generally involves setting financial goals to be sure you're able to live the life you're accustomed to and enjoy the retirement you desire. You might also have personal goals, maybe like traveling or spending more time with loved ones. And like most of us, you may actually recognize that people are living longer. Therefore, your retirement income and your savings may need to last 20 to 30 years long. But creating a retirement income that lasts throughout your life is only one part of successful retirement planning. It's also crucial to think about things that can put the sustainability of your income in jeopardy. And for most people, one of the most common risks to their income plan are unexpected medical expenses. Because the fact of the matter is that at some point, time does catch up to all of us. Chances are you may have already had a firsthand experience with an extended care situation. Maybe you're 1 out of the 5 Americans currently caring for a loved one, or perhaps you know 1 of the 6 million people living with Alzheimer's. Ultimately, the older we get, the more medical issues we have. In fact, 69% of us will need some form of long-term care. That's why it's very important to plan now and prepare for the unexpected. Now, over the years that I've been working with clients, I have found that most people often misunderstand what long term care is and what the need for long term care can mean for them. We think of long term care, often we think of conditions like Alzheimer's, strokes, Parkinson's disease, or we think of the nursing home, but things that are related to getting old or things that aren't going to happen maybe for a long period of time. However, the reality is that over 40% of the people needing care today are under the age of 65 and are receiving care as a result of an accident. And long-term care involves a variety of different services that are designed to meet a person's health or personal care needs, whether that be for a short period of time or a long period of time, and really to help folks live as independently as possible in performing their own activities. Now, there are two types of long-term care services being provided today: custodial care and skilled care. Skilled care refers to skilled nursing or rehabilitation type services, which are often provided by licensed healthcare professionals like nurses, physical therapists, or even by a doctor. Custodial care refers to services that are ordinarily provided by personnel like home health care aides or informal caregivers like family or friends. Now, custodial care consists of any non medical care that can take place at home or an assisted living facility or even a nursing home. It may involve help with your activities of daily living like bathing, dressing, eating, maybe toileting or transferring around, or some incontinence. It can also be supervision for those with cognitive impairments like dementia, Alzheimer's, or early onset memory issues. Keep in mind that when you lose the ability to perform your normal activities of daily living, or if you do require supervision as a result of a cognitive impairment, long term care protection will help you to cover the cost for that care and allow you to maintain your independence. Therefore, it's important to take time today to think about what you might want your life to look like when you need care, but before you actually need it. Because medical needs do catch up with you and things can change very quickly. But what does creating your long term care plan mean? To begin, you must ask yourself these important questions. First, where do you want your care to be? Do you want to receive care at home and stay at home as long as possible? Or would you prefer to having your care in a retirement community or at some other type of facility? If it is a facility, have you visited any of them to get a sense of what type of place you might actually prefer? Are you okay with an average place? Or do you want something more similar to the quality of life that you have now? Next, you must also consider who do you want to receive care from? Is this going to be a spouse, an adult child, maybe a nurse or home health care aide? If your answer is a loved one, does this person know you'd like to receive care from them? Have you actually talked to them about it and discussed your plans? Are they physically, emotionally, or financially able to be your full time caregiver? Does where you live now lend itself well to your care plan? Are your kids willing to move to be your care provider, or are you willing to move to their place for your care needs? Finally, you must also ask yourself, how are you going to pay for your care costs? Do you actually have enough money saved to go the distance without wiping out your income or your nest egg and burdening loved ones? How will your care costs impact your surviving spouse or your partner? Are you concerned about leaving gifts of legacy to heirs? Or are you okay spending all of your hard earned money towards your medical care costs? And if you can avoid this, would you be open to transferring some of this risk away from you by having an insurance plan to help? Now, once you've laid out the start of a plan, it's time to start thinking about how much the care you want might cost. Currently, the national median annual cost of a nursing home is $112,000. And for assisted living, the cost is closer to $54,000 a year. Home healthcare aides in our nation are running just shy of $30 an hour. And these are the costs for just this year. When you need care, maybe 10, 15, or 20 years down the road, these prices are projected to be even higher due to the rising healthcare costs. 20 years from now, you can expect this cost of care to be almost double what it is today. Can you imagine writing a check out month after month down the road, hire a home healthcare aide for $60 an hour? That's $480 a day for 8 hours of care and just over $14,000 a month. Therefore, as you begin thinking about the ways to pay for your future care, it's very, very critical to keep in mind that you're not planning for today's cost, but instead you're planning for prices down the road. The cost of this care could have a dramatic impact on your retirement portfolio, your quality of life, and your family. Now, you might be actually thinking, how am I going to pay for this care? Well, there are four main ways to pay for care, okay? You can choose to self-fund. You could depend on family to help with the caregiving responsibilities. There is some help from government programs, or you can purchase long-term care insurance. Let's examine the benefits and considerations for each of these options more closely. If you choose to self-fund, you can maintain control of your assets and choose where and what type of care you'd like to receive based on how much you actually are willing to pay. For many, the most appealing feature of self-funding is this aspect of self-control. But you're going to want to weigh that sense of control with the potential drawbacks of self-funding. Keep in mind, you may need to withdraw funds from an asset before you plan to do so, which may have some tax consequences or create market losses. Paying for your care could deplete your assets or your income, which would impact your partner's way of life or maybe the legacy you plan to leave to loved ones. Your retirement income plan may not be able to replenish the money you're taking out for your care, which would impact how long your money might last. You could potentially run out of money. Self-funding is generally an option for those that are very wealthy. However, I have found that most of the wealthy people that I talk to tend to understand the principles of transferring risk away from themselves with the use of insurance products. And they often see the wisdom of having some long-term care protection versus none at all. Now, relying on your loved ones to take care of you often seems like a great way to get that more personalized and affordable care than you might receive in a professional care setting. But if you do intend to rely on loved ones for your care, again, it's crucial to start having conversations about your desires and expectations for your care with them now. You don't want your loved ones to be taken by surprise. If a family member is part of your care plan, they need to know about it so they can ensure they're willing and able to provide you with the care you might need. In addition, you also need to consider the financial and emotional toll on caregivers. Caregivers often may pay out of pocket for expenses like gas to go to doctor appointments or taking time off from work to help care for you. Their role as a caregiver may also be a source of stress in their own personal life, especially if they have children and a family of their own. And depending on the care needed, your informal caregiver, your family member, may actually lack the skill set needed to provide the quality of care to you that you need. Now, one of the largest myths surrounding long-term care is that people think that the government will pay for their extended care needs. And unfortunately, Medicare and your health insurance were not designed to pay for those type of needs. So any long-term care coverage that your Medicare or your health insurance plan will cover is going to be very, very limited. First, in order for your Medicare or health insurance plan to pay, your doctor would have to prescribe skilled care in a rehabilitative nursing home. This care is generally for a short-term stay for rehabilitation purposes after an illness that resulted from a 3-day hospital stay. It does not provide coverage for care in the home or care for long-term stays in a facility, nor will it help with the personal care needs, such as dressing, bathing, or your other activities of daily living. Medicare and health insurance do not pay for custodial care. In addition, Medicare does not pay for any long-term care expenses or skilled nursing home care beyond 100 days. After 100 days, the entire cost of this care would fall upon you. Now, Medicaid is a government-funded program for those with limited financial means, which means you must meet the federal poverty level guidelines for your state in order to qualify. This generally means that you have limited income and resources or assets less than $2,000. Medicaid may help for long-term care expenses, but generally for only those received in a nursing home facility, and again, only after spending down your assets to the limit set for your state for eligibility. Additionally, Medicaid does not cover the cost of room and board at an assisted living facility. It only covers the care you receive at those types of facilities. You would be responsible for any room and board costs on your own. Now, long-term care insurance was first introduced back in 1965 as post-hospital care or nursing home insurance by a company by the name of CNA. Back then, these policies were very limited and very few companies even offered these type of solutions until the 1980s. And with the growing need for these policies, our government began to further regulate these policies to protect our consumers while adding incentives for you to buy your long-term care policy. In 1998, when our government passed HIPAA regulations, long-term care insurance plans became recognized as federally tax qualified health insurance. Now, what do those words mean to you? This means that benefits were now regulated to force these companies to offer core features in their plan designs and to streamline how the benefits were triggered. In addition, long-term care plan premiums would now be able to be deducted on your IRS 1040 return as a qualified health plan expense. Of course, subject to the itemization rules for a Schedule A deduction and also based on an age-based table for long-term care premiums. However, more importantly, by recognizing these plans as federally tax qualified long-term care, the benefits that are paid to you for your claim, that income stream we turn on come claim time, get paid to you on a tax-free basis. Yes, you will never pay income tax on any benefits you receive from a qualified long-term care policy. Also, HSA money, health savings account money, can be used to pay for a portion and sometimes all of your qualified long-term care premiums. And if we have any business owners on our webinar today, there's further tax deductibility options you may have as an employer, depending on your entity type. Now, today we have over 24 companies that offer long-term care products, and there are 2 types of products you can choose from for your plan. Traditional long-term care insurance has been around for over 50 years. These plans are often referred to as standalone long-term care insurance policies. This is because they offer one solution to cover your long-term care risk. It's a pure type of insurance, no different than your car, auto, or health insurance. You pay a premium to have access to the benefits when you have a claim. These plans are often more affordable and easy for consumers to understand the plan benefits. Traditional plans are by far still the most popular type of insurance purchased by consumers today. And these products are generally best suited for those who want to leverage their premium dollars into the greatest long-term care benefits while keeping their premiums lower. Now, hybrid long-term care insurance has been on the market for just over 35 years. And these products combine 2 solutions into one product. The combination generally includes a whole life or universal life insurance policy with the addition of a long-term care rider. Or they can also combine an annuity with a long-term care rider. These solutions are often referred to as linked benefit products or asset-based protection. Hybrid plans are generally best suited for those that may want to self-fund, but prefer to do it with tax-free money come claim time. These plans are also a good fit for the consumer who cannot maybe qualify for a traditional product due to health issues. or for those who prefer to get some money back if they don't use all the benefits for their care needs. These products tend to be a little bit more pricey than the traditional plans, but they can offer tremendous value and flexibility. Deciding which route is best for you can be determined after reviewing your specific needs, goals, and of course, your budget for your long-term care plan. Now, by owning a long-term care insurance policy, the plan will provide the money to pay for your care when you need it. The benefits are very simple to use. You can use your benefits to pay for care, whether you want it to be at home, adult daycare, an adult boarding home. It's also available to use for care at assisted living facilities, residential care facilities, nursing homes, memory care facilities, Parkinson's facilities. The plans are very comprehensive and they give you the flexibility to decide where your care will be based on your wishes. Some plans even offer coverage outside of the United States. Now, not only do plans provide the money to help cover your care costs, but added features like home modification benefits allow you to stay in your home longer by allowing you to have money for things like ramps, grab bars, hospital beds, and much more. If you need to have a family member trained as well to be your backup caretaker, then use the caregiver training benefits that are built into your plans to have them properly trained for you. Policies also help even to pay for household services like shopping, light housekeeping, laundry, meal prep, maybe running you back and forth to the doctor appointments. Ultimately, your benefits are yours to use for your care costs. This can make a profound difference in both your life and your loved ones' lives as well. Now, something to keep in mind about long-term care policies is that you will need to medically qualify to get the coverage. You cannot just sign up, you must actually be approved. As you can see, the approval rates for long-term care insurance products tend to decrease with age, which is why it's so important to begin planning as soon as possible when you're younger and potentially at your healthiest. Once your health declines too much, it may cost you more money to actually secure the coverage, or you may be non-insurable altogether. It is recommended that you secure your long-term care policy prior to age 60, but preferably in your 40s or early 50s if you can. The younger you lock in your age and health with a long-term care plan, the more affordable your rates will be. Now, an even more pressing reason to consider buying your long-term care coverage now are the looming long-term care tax mandates. Yes, this means mandated long-term care insurance you must have in force or you will be taxed. Washington State was a pioneer by passing legislation in 2021 offering very limited long-term care to their residents funded by a payroll tax. With the Washington Cares Fund legislation that was put into action, Washington residents were given a very short period of time to secure qualified long-term care insurance in order to avoid a payroll tax on all earned income. Higher wage earners could be hit the hardest by this payroll tax if they did not opt out by securing their own private plan. The deadline for Washington wage earners to have a plan in place in order to opt out of the tax ended on November 1st, 2021. This left many, many workers no time to secure a plan in time, and now they are forced to pay the tax. Those who do not own a qualified long-term care policy will get a state-supplied benefit of $36,500 of lifetime benefits to help pay for their extended care needs in exchange for their lifelong of payroll taxes. Considering that Washington is one of the country's most expensive states for long-term healthcare costs, this plan is hardly a solution for long-term care, and critics are calling it a cash grab by politicians. And now that Washington has taken this action, other states are getting close to implementing their own tax programs as well. New York State is looking to go down a similar path with a potential payroll deduction collected by employers. However, the premium contribution amount has not yet been decided. Unlike the state of Washington, New York is not going to allow time for people to opt out. The bill requires coverage to be in place before the law goes into effect in order to opt out of their tax. California, the nation's most populous state, is in the final review stages to implement a payroll tax to fund a small amount of state-provided long-term care coverage, similar to Washington. At this point, the California long-term care tax mandate that could be recommended is looking at being approved by January 1st of 2024. And then the payroll tax would start as early as January 1st of 2025. This would give California wage earners potentially 1 year to secure long-term care coverage or be forced to pay the payroll tax in their state. Pennsylvania and Minnesota appear to be next in line for introducing their tax mandate for long-term care, with other states soon to follow. Now, why are the states and our government rolling out these mandates? Basically, our government wants you to take responsibility for your own long-term care coverage. Therefore, when considering when to buy, it would be very prudent to stay ahead of these long-term care tax mandates, avoid the tax, and secure your plan now. Okay, so now that you understand what long-term care is, what these policies actually cover, when you should buy, you might be wondering, what are good policies to buy? What are good benefits? Well, when looking for a good policy, it is important to first pick a top-rated company for your protection. You want to find a company that is financially sound with an A rating or better on the AM Best. You also want to choose a company that has experience in the long-term care industry. Then more importantly, you want to work with a long-term care specialist to design your plan so that it's customized to fit your needs. There's no one plan for all. It's very, very much a custom tailored design. The key components to designing a good long-term care policy involves these steps. First, you'll have to choose a daily or monthly long-term care benefit amount. This means the amount of money the policy will pay out when you need your care, basically that income stream. Next, you need to select a benefit period or a benefit multiplier. This is going to be a period of time used to determine your overall benefit value or your pool of money. For instance, if you insured for $5,000 per month of long-term care coverage for a benefit period maybe of 3 years, that would give you $180,000 of total long-term care benefit value or a pool of money to spend on your care needs. Basically, we multiplied the $5,000 each month of benefit by the 36 months, the number of months in a 3-year period, to give you your pool of $180,000. Then you must choose an elimination period. Think of this like a deductible. However, instead of a dollar amount, your deductible is going to be calculated in days. As an example, if you chose a 90-day elimination period, then your policy benefits would not pay out towards a claim until after you paid for the first 90 days of care on your own. Then on day 91 or the 91st day that you need care, you would be eligible to receive your benefits. Most carriers offer different elimination periods, anywhere between a 0, 30, 60, or 90-day elimination period option. The most popular among consumers today is a 90-day elimination period. Finally, you must also choose whether to add inflation protection or not to your coverage. For those of you under the age of 75, we generally recommend adding inflation protection at a rate of 3% or 5% compounded. For those over the age of 76, often we can limit the inflation protection for a specific duration, or we can consider, if appropriate, for you to forego inflation protection altogether. Now, after designing the key components of your plan, you then will want to consider if adding any additional riders may be necessary. As an experienced specialist, we would advise you of any recommended riders based on your situation, or if they would add any tremendous value to your plan that you might want to consider. Be sure whatever long-term care plan you choose provides care coordination as an included benefit. Care coordination involves organizing patient care activities and sharing information among all the participants concerned with the patient's care needs to achieve a safer and more effective care situation. Think of this person as your personal care advocate or your care concierge. They help with the claims process, they'll fill out the claim forms, they'll help arrange care at home or in a facility setting, and so much more. This person has an active role your ongoing care plan. They do not work for the insurer. They are people who often work for home health care agencies or run their own care coordination businesses. A good long-term care policy will provide the funds so that you can hire a care coordinator to alleviate this burden off your shoulders and, of course, off your family's shoulders too. Keep in mind, the main purpose of having a long-term care insurance policy is that you have the freedom to use your benefits however you want, and that you can be flexible in your approach to selecting the level of care that's right for you when you need it. Therefore, by owning a long-term care policy, no matter what happens, you're going to have a plan that provides you peace of mind. If you need long-term care and go on claim, you'll receive a monthly or daily benefit you can use however you choose. By using the policy, you never have to worry about asking your loved ones to be your caregiver. This can be a choice for them versus a have to. And with a long-term care policy, you will have the additional income stream that you can use for care. And more importantly, by securing your long-term care plan, you maintain control. The policy will give you the freedom to have your wishes met so that you can be in charge. Navigating the waters to determine which type of long-term care coverage is best for you can be tough. Planning for your future includes considering your needs for care down the road. With the possibility of longer lifespan and complex healthcare needs, preparing means you can have more confidence by addressing these realities today. With more long-term care solutions on the market today, we are able to customize that approach that's best for you and your future. You can go the route of a traditional long-term care policy, or you might lean towards a hybrid plan. Every company has their own niche, and some companies focus on only insuring the healthiest people. Some people want total peace of mind and choose to fully insure for this risk, while others prefer to co-insure and keep their premiums lower. Overall, a well-designed long-term care policy will help you when you need care for your extended activities. The good news is you do not have to charter the waters of long-term care planning on your own. By working with your alumni's independent long-term care specialist, we can provide you the information and resources to help you understand your options and how to make the best choices for your long-term care protection. We realize that starting the long-term care conversation is never easy, but it is a step in the right direction. At Capstone Financial Assurance, we want to make exploring your long-term care insurance solutions easy. We do offer a no hassle, no obligation, and complimentary approach to help you address your care concerns. If you'd like to learn more about whether or not a long-term care policy is right for you, then the next step would be to schedule your introductory meeting with one of our long-term care specialists. The initial meeting takes about 15 to 20 minutes of your time. We complete this meeting over a phone call, and during the meeting, we take the opportunity to learn a little bit more about you, your concerns, and it allows us to ask the pertinent questions we need to begin preparing information specifically for you. Now, we're not going to give your information out to anyone else. We do keep it secure, and you would only be contacted directly by one of the Capstone team members pictured on this page. We do have two ways you can reach out to us. You can visit our website at capstonelongtermcare.com and request an introductory meeting there, or you can scan the QR code on this page with your camera, your smartphone camera, and be directed to our team calendar to schedule your meeting now. All right, at this time, I want to go ahead and open up the webinar to questions. So if you've not already done so, please feel free to enter any questions you have into the chat. We will work through each of them before we conclude the meeting. Caitlin, would you be a sweetheart and assist me in reading the questions in the chat for me?
All right, well, Caitlin's bringing up those questions. I'm going to go ahead and share my screen for that QR code in case any of you do want to book your appointment with us. So let me pull that up. There we go. And Caitlin, are you ready to go ahead and launch those questions?
I am ready, Christina. Thank you so much for that presentation. So the first question I have, and we get this one pretty frequently, do you have to be a CSU alumni in order to take advantage of these benefits?
No, you do not have to be an alumni member to take advantage of our services. These are open to anyone, friends, family, other loved ones you might know that would be interested in securing their future with the protection.
Perfect. How do you determine what to recommend is the right plan for someone?
Oh, I love this question. Well, we take a few things into consideration. First and foremost, we're going to always consider your health. Health is really going to dictate which company you'll be eligible for. You do have to qualify for this coverage based on having fairly decent health. And then we would also next look at your overall needs. What are you trying to accomplish with this plan? What kind of features are going to be important to you? And then that would help us drill down to the carrier recommendation that would offer you that sort of value. And then also reward you for your good health and age with the most affordable premium.
Perfect. We saw your graphs about how the percentage of people accepted as you get older. Is it ever too early to start your long-term care policy?
No, it's definitely never too early. We can insure people down to 18 years of age now. And, I find there's certain crossroads for a lot of folks when the timing is right. Certainly, you want to make sure the premiums are something that are comfortably affordable and you can continue to pay. And if you are younger, that's something we would review is your budget and to make sure any plan we put you in would be something that you could take to go the distance.
Perfect. This is an interesting question that I don't know if I've heard you answer before. What is the average amount of time from the introduction call to acceptance and starting a policy?
Yeah, so this can vary from person to person. The introductory call usually, takes about 20 minutes of your time for us to gather those details. Sometimes a little bit longer if you have some initial questions, but 20 minutes on average. The consultation meeting, we ask to reserve an hour and a half of your time total just to get through all the product materials, answer your questions, and then get into a plan design with you and the numbers. It's truly a um, process that we're going to engage you and ask a lot of questions to make sure we're getting your plan design correct. Once we submit an application, depending on the type of product that we're going with, we can have approval decisions in as quickly as maybe 2 to 3 days with some of our products. And with other products, it can take 6 to 8 weeks before we can get you approved. If we have to pull medical records and do phone interviews or memory tests as part of your qualifications with certain carriers, then it would be in that longer range for the approval period. Once you do get approved, a policy would be issued. We'd have a period of time called your 30-day free look period where we can make any changes to that plan and fine tune it to exactly how you want the policy to carry forward.
Wonderful. Good to know. Next question I have for you. Someone said, I live in multiple states throughout the year. Is there policies that cover those who tend to travel and live in more than one place?
Yes, the policies are completely portable. They're all good in the United States, Canada, and any US territories. Most of the policies also have some type of international coverage built into them. Some of them are maybe 30 to 60 days of international coverage. Other products, we can give you up to 2 years of international coverage. So depending on your needs, when we do that, introductory call will help us determine which one of those products are best for you.
Wonderful. Good to know. Um, Someone said, I am having trouble approaching this subject with my aging parent. Any advice?
Yeah, that's always a tough one. I mean, I remember when I first started my career 24 years ago, trying to get my parents to buy a policy, and it was like pulling teeth, let me tell you, to get the conversation started. They did end up buying a policy from me, thank goodness. But one of the best ways to start the conversation is really by educating folks. That's one of the reasons here with the University Alumni Association that we do these educational webinars, because education is going to create awareness. Sometimes people don't even know that their current health insurance or Medicare does not cover long-term care costs. So education is key. And also just really asking your parents, what their plan is. The holidays are coming. It's a good time to have these conversations and ask your parents, say, I was on a webinar that talked about long-term care and extended care planning, and I'm curious, do you have a policy in place, or what is your plan if something happens and either one of you need care? So just starting those questions is key, and not being afraid to ask the difficult questions, because it is a topic no one wants to talk about. Let me tell you, everyone wants to push it to the back burner if they can. But once you can get the conversation going and you can get a plan in place, whether it be through a policy or you sign up to be the caregiver, it's a checkbox you can check off on the retirement planning process for your folks.
And from personal experience, a little plug, this will be on YouTube after the event, and sending the link to a parent also works really well. So Christina, a few more questions. Are there tax benefits to a long-term care policy?
Yeah, most policies today are classified as federally tax qualified long-term care insurance products. It is considered a health plan. So as an individual, you do have some tax deductibility potentially on your individual 1040 tax return. As a business owner, if there's any business owners out there, you have a little bit more advantages. With some entities, this can be a complete above the line deduction taken from the business. Also the benefits when you receive them, down the road, you're getting a check to help pay for your care. Maybe it's 10, 12, $15,000 a month coming in to pay for that care. That money comes to you on a tax-free basis. You will never be taxed on it for income tax at all.
Wonderful. We had a few questions about financial planning to prepare for long-term care insurance. Any recommendations how someone can be smart in their planning process there?
Yeah, I mean, long-term care insurance is really part of your retirement planning. You spend all those years building your portfolio so that when you do retire, you can do the things you want to do. You can travel, you can spend time with family, and you don't have to worry about not having enough money to pay for the things you need to do and the things you want to do. And long-term care insurance is the one thing that can cause uncertainty in that retirement portfolio as you begin to plan for those golden years. And so if you plan for it appropriately with an insurance product or another strategy that you decide might work best for you, then you don't have to worry about those uncertainties. It's all about transferring the risk away from you, just like you're doing with your car insurance, your homeowner's insurance, your health insurance. You don't want to pay that bill if you go to the hospital. Well, long-term care insurance is that post-hospital care after they kick you out to say, hey, we're going to pay that bill for you versus you having to do it out of your income and portfolio. So it is the final piece of protection. Extended care events can have unlimited financial hits to your portfolio. And if you want to guard yourself against that uncertainty, I would definitely recommend you start a conversation and find out if this is something that'll make sense for you or not.
Wonderful. Last question for you, Christina, and you've reviewed it once before, but where does one start? How do they get the ball rolling on this?
Yeah, so you want to get the ball rolling by scheduling your introductory meeting. Be prepared to answer some health questions during that conversation. If you're going to be considering this product for someone else in the household besides yourself, it's always great. We can have both of you on the call, but if not, at least one person on that first call who can answer the health questions for all parties involved. And then we do ask some financial questions as well, because the financial questions are going to help us determine, which products are best suited for you and affordability. But scan that QR code on the screen, set a time on our calendar to start your conversation, or go to the website at capstonelongtermcare.com. You can review some of our resources and materials there. You'll also find a copy of this webinar on that page as well, in addition to the YouTube channel. But the most important thing you can do for yourself is just to reach out and find out what these plans are about, and then decide how you want to handle this risk.
Thank you so much. Thank you everyone for joining us today. Again, as a reminder, we will be sending you a link very soon that will take you to this recording so you can watch it again or share it with any of your family and friends. Like Christina said, the holidays are a great time to engage in some of those conversations. So thank you to Capstone Financial Assurance Team for their valued partnership. And I hope everyone has a great day. Stay safe, stay stalwart, and go Rams.
Go Rams. Bye, everyone.